As we move into May, equity markets are balancing global uncertainty, geopolitical developments, crude price movement, and evolving institutional flows. While the global policy cues continue to influence sentiment, domestic factors such as earnings trends, valuations, and liquidity remain the key drivers for Indian equities. To help us understand what this means for the equity market in the month of May, we have with us Mr. Harsha Upadhyaya, CIO, Equity and Debt at Kotak Mahindra Asset Management Company Limited. Welcome to the show, sir.
Thank you.
So, how would you describe the overall equity market environment as we enter May, considering the mixed global cues, ongoing geopolitical risk, the policy uncertainty, and how are these factors shaping up the equity market sentiment right now?
As you mentioned, I think most market participants have been focusing on the geopolitical risk at this point of time. Since the cues from that side have been quite mixed or nothing positive has come out until now. So to that extent, market has remained volatile. And unless we see any resolution to the ongoing West Asia conflict, our belief is probably markets would continue to remain volatile and the sentiments overall will also be quite volatile.
So, domestic markets have seen intermittent volatility, right? Are valuations offering comfort at current levels?
Definitely, if you look at large cap valuations or even mid cap valuations, at least when the markets fell earlier, they had come close to long term averages or below long term averages. Now, with the markets moving up in April, maybe they are slightly around that long term average or slightly more than that long term average. But still, I think if you build a portfolio of good businesses within large caps and mid caps, I think there is money to be made. So, to that extent, valuation comfort is definitely there in the large cap segment as well as on the mid cap segment.
So, institutional flows continue to be an important driver, right? How should investors interpret FII and DII activity at this stage?
See, clearly, when you look at domestic flows, it continues to be very, very strong. In fact, the SIP flows that came into the industry in the month of March was one of the highest that we have seen on these years. So the domestic flow continues to be very, very sticky and steady. No let up in that flow at all. However, if you look at foreign flows have been quite weak for quite some time now, and that continues. In fact, even in the month of April, they have been on the selling side. Clearly, Indian valuations at some point of time in the recent past was much higher than some of the other emerging markets. And also, in terms of earnings outlook, India was not really at the top of the category at
Mm.
that point of time. So these reasons led to foreigners selling Indian equities. And of course, the geopolitical risk and the ill impact of two down prices, which have gone up considerably in the last 2 months, has also been playing on
Mm.
foreigners' minds. So, to that extent, the flow from that side has been quite weak. However, that's more than compensated by the domestic flows, which have been very, very strong.
Earnings season is underway. What are the key signals that investors should track from corporate results?
If you look at the earnings, clearly there will be some set of companies which would have had adverse impact of higher crude prices and lack of availability, etc., during the fourth quarter of financial year 26. And some of the other companies may have that negative impact coming in the first quarter of financial year 27. So overall, if you look at whether the current result season or the next result season that you will see any great positive uh, commentary or positive growth outlook in terms of earnings. However, our belief is most market participants would look through these results and would look for financial year 27, the rest of it, how it's going to pan out, and financial year 28 numbers. So, to that extent, I think everyone understands that we are in the middle of a war. There has been a disruption in terms of crude availability. There is going to be some adverse impact on earnings. But however, that's most likely to be a short term phenomenon. And hence, I think the focus would be more on how post the war things would shape up and what's going to be the earnings trajectory post that. I think that's the focus area for investors.
Please also tell us, with the cross asset volatility persisting, How should investors think about equity allocation in the near term?
Even at this point of time, our view on equities remain positive because clearly, while there are geopolitical issues and the risks associated with it, the valuations have also got corrected, as we discussed earlier, reasonable levels. So, to that extent, I think the allocation should be at neutral level for equities, and any further fall in the market could be used to add equity allocation in one's portfolio. And within equity allocation, our preference would be for large caps and mid caps, as I highlighted that the valuation comfort in those baskets are better at this point.
And what is your advice to the investors to avoid short term reactionary decisions during market swings?
Of course, when you're in the middle of a crisis, all eyes will be on the crisis, and hence it's difficult to take a decision or difficult to forecast how things are going to pan out going forward. But every crisis is also an opportunity because in crisis periods, the valuations also go down. And this is one such period. So, to that extent, I think one should make use of these reasonable valuations to really increase your equity allocation or at least bring it up to the intended levels through staggered and disciplined approach. And of course, the focus has to be long term. It cannot be about next few months or what's going to happen exactly in this quarter, etc. You need to take a slightly longer term focus and also build that portfolio over a period of time. And hopefully, as the problems from the geopolitical issues recede, we will start seeing a better business growth and profitability.
So, looking ahead to May, what are the key triggers that could set the tone for equity markets?
Although we are in the middle of an earnings season, I don't think the earnings are going to drive the markets. As I said, the geopolitical issues are at the center stage. I think what happens to West Asia conflict, are we going to see a resolution? How long this is going to continue? These are some of the things that will drive the markets rather than the earnings season, in our opinion.
Thank you so much for joining us and sharing your insights on equity market outlook.
Thank you so much. Thank you.
We hope this discussion helps our investors navigate May with greater clarity and perspective. For more such discussions, stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.